Is it a crash or a correction? Coles lists today, and all this stuff around negative gearing and tax refunds for retirees starting to become a big news story. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, is this a crash or a correction?
Well, Peter asked me a week ago, I would have said a correction, a little less confident today. But look, I still think we're in that season of October, November. There's enough uncertainty. The market needed some uncertainty. I mean, I think what's probably changed this week versus a couple of weeks ago is the market starting to question whether growth is now peaked.
Yeah.
And I don't think they were doing that a couple of weeks ago.
They weren't.
Clearly, you know, as you've alluded to, we all know that the FANGs have been overvalued, so it's not surprising that those stocks have come back. But what the underlying theme has been more about, you know, not peak earnings per se, but growth is sort of tempering. Some of the Fed's comments have been a bit tempering. We've seen bond rates tick down. Yeah. Although commodity prices, by and large, until we saw oil last night, have held up pretty well. So I'm sort of a bit confused, but I still think it's a correction, Peter, and I think people are going to sit on the sidelines.
But it's funny, Paul, you're one of the people who always say bond markets are always right, but they're always right until they're wrong.
That's right.
And then the new decision is sort of going to be right, like because bond rates are starting to fall, yields fall. Oh, maybe the economy's slowing down, but they were tipping it was going up, weren't they, a few months ago? So they're wrong then. Are they right now? Who knows?
Oh, look, I don't think the bond market is actually right or wrong, Peter. I'm just alluding to the fact that the tone has just changed a little bit. It's just that's people getting a little more cautious about saying, well, maybe US economy is as strong as it's going to get. We're going to slow down it just a touch. But look, I think that talk is easy. Let's just see how it pans out. The G20 meeting, this whole trade thing still sits on top of markets. Yeah. You know, President Donald, as much as we don't like him, he's good at pulling out deals.
We need a rabbit.
He pulls a rabbit out of the hat. Who knows what will happen? I think this is a time just to be a little cautious, but I don't think it's time to get out of the market. I think it's time to look for the opportunity, but maybe you've got a bit of time, and we're going to see a few tough days in the market.
Yeah, I said on radio this morning, it's a buying opportunity, but that buying opportunity is not now. It's going to be in probably 4 or 5 days time, could even be 10 days when the Argentina G20 meeting is on. But let's hope it happens soon. Coles listing today. Now, you've followed this pretty closely. What's the story?
Well, Coles, obviously, the split off from demerger, so there'll be hundreds of thousands of new Coles shareholders. Coles, under the stock code COL, comes on the market at 11 a.m. Look, demergers normally make a lot of sense because, you know, you get the refreshed management. They're suddenly free of head office, all the rest of the stuff they can spend.
Are they the fresh food people, Coles? That's Woolworths.
I'm not sure this is going to be a huge winner, and I just don't know whether supermarkets with Aldi, Costco, Kaufman and others coming, I just don't know whether this is the place to be in. So normally what happens with demerged shares is they don't do very well for about the first 6 months, and that's because there's actually a surplus of stock. Because suddenly the people end up with Coles shares, sometimes quite small, and say, I don't really want it, or a fund manager gets it and sort of has been in Wesfarmers for other reasons and gets rid of Coles. So they normally have a tough time for the first 6 months or so, and then they find a bottom, and then the market reevaluates and says this company's actually, you know, got some potential. So where it's going to trade, settle down, I think you just probably got to watch that out for a few days until the analysts can get it properly valued. But my guess is that if you don't want to be in supermarkets and you've got some Coles shares, you're probably going to be better off selling off early on. And then you've got lots of chance to always buy back if you really think that's the business to be in.
I don't think it's going to be a great day to sell, Paul, on the same
Probably not the great day to sell, and it'll take a little while for the market to get a really good handle on the price. But, you know, the last big demerger was CYB, which was the Yorkshire Bank out of NAB. You recall that came on about $4. It waffled around, it went in the low threes, and then it's done rather well. So
despite Brexit. If Brexit wasn't there, it'd be a lot higher.
So, look, Coles possibly in the same camp. I just don't know whether it's actually had all the head office shackles that other demerged companies. Normally, demerged companies are the unloved parts that no one cares about. Coles was by and large
the love bit.
Well, it wasn't, but it was 60% of the capital in Wesfarmers. So it had a lot of focus. And I'm just not sure that there's really much has changed. So we'll see.
Yeah, the bell went off ages ago.
Yeah, it did.
All right, now one last thing. Bill Shorten's policies are now people are starting to look at. Negative gearing policy and the tax refund for retirees. Do you think he's going to change either one of those policies?
Look, I think there will be a change. I mean, the stars are lining up. You might have heard, if you're a Sydney or Brisbane listener this morning, Alan Jones interviewing the Prime Minister, got really stuck into it. So Jonesy's onto the case. It's getting its own sort of political momentum. The data is clearly showing that there's going to be about 1 million Australians impacted. I think that at some stage there will be a change. I don't think Shorten's going to abandon it, but I think either he or if he does get into government, the crossbench will amend it to sort of...
Are you talking about tax refund for retirees here?
Yeah, I think somewhere where, you know, maybe 10, 20, somewhere, some sort of capped refund so that the smaller, you know, the actual person who's worked really hard and
who
saved
needs that refund.
And needs that refund is less impacted, and maybe the big guy...
The multi-millionaires get caned by
but
Bill.
Look, I don't know how Shorten... Whether he can do it pre-election or post-election, I don't know. But certainly it's a good issue for...
If there's traction, he'll do it pre-election for votes.
Yeah, I mean, they didn't really think it through, the policy, and that's why they already had the first cave-in when they exempted part pensioners, and I think there'll be another cave-in in due course.
Finally, the negative gearing. My view is if we're in the middle of a boom, I guess I just have to accept that that's what Labor wants to do. What worries me, the house prices are starting to fall. And I just would like to think that a future Prime Minister could be flexible and say, well, if the economy doesn't really need this right now. But do you think he will be flexible on negative gearing?
Really, really tough one. I mean, he'll come back and argue he's grandfathered, you know, and of course, so no existing negative gearing borrower is going to be impacted.
Yep.
The arguments being raised, of course, is that just as fewer investors means less demand for houses, so it's a negative for the house price. Yeah. And the other argument, which I think is harder to sustain, but they'll keep on raising, the government raises, rents will go up because the people who've invested in property just aren't going to get the returns. Rents are too low anyhow. I think if you look at the data, not as hard argument to make to the renters in terms of yields. You know, 3%, 3.5%. It's a very low return. So rents could go up. So look, I don't know whether they can cave in on that quite as easy. Think about dividend imputation and franking credits. No one understands it, right? So it doesn't. Sure, it has a lot of traction with the self-funded retirees, but it doesn't have a lot of traction with a lot of other voters. Yeah.
Unless those voters are the sons and daughters of those retirees whose inheritance will be shrunk.
Right. And sometimes people don't quite get that. Look, I think that's an easy one to change. The question is, can you have two backflips, right? Yeah. And this would be a huge backflip to walk away from negative gearing. I'm not sure he's going to do that, but maybe the answer for him, as you say, Peter, is delayed transition. We'll delay it by 12 months or 2 years.
Yeah, and I like that flexibility in a Prime Minister, is to say, okay, I've got a good policy, but if the economy is not ready for it, I'll introduce. And that's what Hawke was like. Hawke was flexible. He went on. He was backing a retail sales tax until he realised it wasn't going to sell, so he backed away from it.
And remember, they've never actually announced the start date.
No.
All right. With the excess refunds on franking credits, that is due to come in from the 1st of July 2019. But they've never actually announced the start date for the negative gearing change.
Yeah. No, that's good.
To a date to be announced. And maybe the smart thing would be for Shorten to say, well, we're going to defer at least 12 months, possibly a couple of years. We want to just get a bit more stability in the housing market before we do it.
Gee, you're saying like a Prime Minister, Paul. And one final thing, Paul, we should point out that if you are worried about investing in franked dividend stocks and you're worried about retiree tax refunds being knocked back, we have the Switzer Income Conference at the Wesley Centre in Sydney on November 29 and in Melbourne at Zinc on November 27. And it's a conference where we look at alternatives if you're really looking to boost your income in retirement or pre-retirement, ahead of retirement. So that's going to be a really good event.
Yeah, looking forward to it. Next Tuesday in Melbourne, the following Thursday in Sydney. Get your tickets now because we're about to close. So
Switzer.com.au/event is the website for that. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
Content has been prepared without taking account of an individual's financial objectives, needs, or financial situation. It does not constitute formal advice. Before acting, any individual should consider the appropriateness of the information, having regard to the individual's financial situation, needs, and financial objectives. Past performance is not a guide for future performance. AFSL 286531.